Geographically, the seventh largest country in the world. One of the oldest civilization. World's sixth largest economy. A global hub for innovation with one of the largest startup ecosystem. India. City of Mumbai on the western coast of Arabian Sea, among the most advanced and modern metropolises in the world, and the financial capital of India, gears up to host the most prestigious accountancy event of the world, 21st World Congress of Accountants from 18th to 21st November 2022, an event held every 4 years. The Olympic of Accountancy Profession. India hosts the event for the first time in 118 years since the WCOA came into being in 1904. Around 10,000 delegates expected to join virtually. More than 6,000 delegates from over 135 countries would congregate to exchange views at the world's most advanced Geo World Convention Center. The theme, Building Trust, Enabling Sustainability, will inspire the future of accountancy profession to create sustainable economies for the future.
The ICAI is honored to be the host for this mega event, which will bring together the world's largest conglomeration of professional accountants, regulators, leaders, and visionaries to advance the cause of the global accountancy profession. Now, with the ease of travel restrictions across the world and the situation returning to normal, we are working towards creating a never before and a unique experience for all our delegates. The year 2022 marks the 75th year of India's independence, and the Government of India is celebrating the year in a big way to showcase the glorious history of India. World Congress of Accountants 2022 would also be celebrated as a mega event to showcase the important role that the accountancy profession has been playing in the economic and social development of the country.
A never before witnessed unique experience of learning future trends, emerging avenues, enhancing skill sets, networking, and to explore the incredible India awaits you.
We at ICAI are pleased to host you here in Mumbai, the financial capital of India, for the 21st World Congress of Accountants with the theme Building Trust, Enabling Sustainability from November 18 to 21, 2022, and give you a professionally enriching and personally rejuvenating experience. We are hopeful that the conference shall be stimulating and productive, and your stay in India will be a memorable experience. Once again, we invite you for this enthralling convergence in India, the land of multicultural, historical, and spiritual inheritance since centuries.
Insights from the stalwarts of the profession, international and national standard setters, regulators, and trendsetters will constitute the panel of speakers at WCOA 2022. Let your dream get bigger. Come, be a part of this mega celebration. For registration and sponsorship opportunities, contact. Organized by Institute of Chartered Accountants of India under the aegis of IFAC.
A very good morning to all of you. On behalf of Committee on Public and Government Financial Management of ICAI, I welcome you all to the webinar on Local Government Taxation Matters, Status and Compliances that is being organized by the Committee on Public and Government Financial Management under the theme of Azadi Ka Amrit Mahotsav. I would like to welcome CA S.N. Gupta, who is Joint Director and is heading Technical Directorate of ICAI, to enlighten us with his words of wisdom. Welcome, sir.
Am I audible, Shivani?
Yes, sir.
Okay, good morning, all of you. On behalf of Institute of Chartered Accountants of India, I welcome all of you. It is indeed a great pleasure for me to address the viewers who are attending this webinar on local government taxation matters, status and compliances, being organized by the Committee on Public and Government Financial Management of ICI under theme of Azadi Ka Amrit Mahotsav. I welcome CA Sumita Bre, a very respected and eminent speaker from Kolkata, who has agreed to enlighten the participant about this subject. I also welcome all the participant officials of local bodies and members of ICI who are attending this webinar from all over India. In this direction of improving financial reporting and financial management in local bodies, the ICI as a partner in nation building is making significant efforts to improve their accounting and public financial management system by prescribing accounting standards for local bodies, organizing workshop, training, and other programs developed for this purpose. Taxation system plays a very great role in the growth of any nation, as it generates revenues for the government and that ultimately helps government to finance public goods and services. Local bodies are tax collectors as well as taxpayers. However, the taxation system in local bodies is not up to the mark. We all know that the technological innovation can be of instant help in tax and revenue collection. After COVID-19, the idea of digital economy has significantly improved and has given substantial benefits, particularly in simplifying procedures, e-filing, e-payment, and e-government ecosystem that lead to reduced compliances cost, increased tax uncertainty, and higher compliances. More user-friendly, as having option of pre-filled tax return, taxpayers access to their own filing information, etc., that reduces the obstacles to the compliances. Further, this IT reform has been able to manage big data in efficient, effective manner. It also helps accounting and auditing of taxation, as proper audit trail do exist in audit system these days. This webinar, the viewer will be able to know how information technology has improved procedures, documentation, accounting and auditing of the local body in taxation matters. I hope that enriched deliberation which is going to happen today in this webinar will widen your understanding on the subject matter. I once again wholeheartedly welcome all the viewers all across India and abroad. All of you are welcome in this webinar. And now I hand over the floor once again with the expectation that this webinar will be of immense help to all the viewers. Thank you very much. Over to you, Shivani.
Thank you, sir. Our chairperson, CA Kamisha Soni, was expected to join us, but she will be joining within the next 5 minutes. In the meantime, I would like to welcome today's faculty, CA Sumitaba Ray. CA Sumitaba Ray is a seasoned professional with more than 22 years of post-qualification experience. He specializes in financial management, government accounting, and implementing computerized accounting system and implementing financial and accounting reporting in government systems. He is presently working as International Fiduciary Management Specialist in Nepal for School Sector Development Program and as a Team Leader, Public Financial Management Specialist International for Strengthening Municipal Financial Management Program of Narayanganj City Corporation in Bangladesh under ADB loan. Welcome, sir.
Yeah, thank you, Gupta ji. Thank you, Shivani. As told that I would be breaking in some time so that there can be another round of an introduction. Now, I will straightway start with the session today, because the session, as has been structured, is not only interesting but it's also very complicated. So I would not waste too much of time in introductions. Already what Gis Gupta Sarji and Shivani have given is enough. So let's start the session. I share my screen and hopefully I will be able to complete in time, because when I was preparing the presentation, I thought that I may overshoot, but it may overshoot by 5-10 minutes. I don't know, but let's see. But another thing is that I will hold all questions at the end. So all questions and answers will come at the end. So kindly note down your points. So we can take up the question and answer session at the end of the session, because in between taking questions is always a little distracting for me, because I'm not that tech savvy. So always I go away from the flow of the presentation. So let's share the screen and let's start. Okay. Now this is the second part of the series on taxation matters, on local government taxation. A couple of weeks back, I had a session on about GST and income tax impacts on the local bodies. So that was a session, and this is the second part of the series of the session. And the entire program, as you have already understood, has been organized by our institute, and most importantly by the Committee on Public and Government Financial Management. Now, this is also a part of the program Azadi Ka Amrit Mahotsav. We are celebrating the 75 years of our independence, so that's a part of that program also. So again, I would say this is a little complicated session. We have to understand many things. Many of you may be knowing about all these things, but again, those who are not aware of, so they need to understand. So I have tried to structure the session in such a manner that it becomes more comprehensible to all. But excuse me if I miss a couple of points, because again, I would say this is a 2-hour session. I have to include many parts. I have to leave many parts. So let's start. So hopefully the session would be lively, and we will be taking the questions at the end of the session. Now, as usual, I always put a disclaimer. Now, whatever information I had gathered and presenting over here, these are all my interpretations of the law and interpretation of the figures and facts that are available. Now, some of the facts and figures were available with me from my experience of working in this sector for the last 18 years. And whatever views I would be putting across, these are all my personal views. All articulation are my personal articulations. There's no way the ICAI or any regional branch or any member of the ICAI or the Government Authority of India are responsible, or they are their views I'm putting. So these are all my views. But whenever you have to rely on these views and opinions and figures and facts, kindly do a cross-checking and a due diligence before you put a full reliance on the facts and figures that I'm stating. Now, coming to the discussion outline, as I've already said, it would be a long session. It's not a very short session. Now, I would be starting with a brief history of the local body governance in India. Now, this I am purposefully included in this session because I don't know what are the composition of the audience. Now, I understand our members are there, some local body officials are there, but those who are new to this sector, new to this area, so I would try to brief them a little bit of the local body governance history in India. Then most importantly, the 73rd and 74th Constitutional Amendment Act. Now, this is the most pivot legislation, or the pivot landmark event, we can say this, the passing of these two Constitutional Amendment Act. Now, of that Constitutional Amendment Act, I have only taken out the local body taxation matters and the auditing and accounting matter. I cannot discuss, or rather we will not be at liberty to discuss everything of the 73rd and 74th CAA. Then there will be a short outline on the impact of GST 2017 on local body taxation, because as you would understand, local body taxation covers indirect taxation, and GST Act 2017 basically subsumed many of the indirect taxes in India. So what is the impact and how that has impacted the local bodies, that we would see. Then a little bit of the municipal finances, because until unless we understand the municipal finances a brief, we will not be able to move forward to understand the revenue structure. Then the local body government taxation matters would come, and use of IT technology. Then the procedures and documentations improvement required, and lastly the accounting and auditing of local government taxation. So basically, this is the discussion outline. So let's move ahead one by one. Now, before we hit onto the history, just to give an idea to those who are totally new to this sector of discussion, in India we have a three-tier structure. It's very clearly defined, very well structured as by our constitution. Now we have the central government at the top. Then we have the provincial government or the state governments or the government of the union territories, the UTs. And third layer is the local government. Now, our discussion today basically focuses on the local government, the last tier. Now, under the local government, kindly note that there are two types of local government we have. One which administers the rural side of our countries, and one which administers the urban side of our country. The urban means the cities and towns, and the rural side means the villages and the area around the villages. Now, the village administration or the rural side administration is left with the panchayats. Now, that's why the total organizational setup under the panchayats are called Panchayati Raj institutions, PRIs, Panchayati Raj institutions or PRIs. And the local and the urban side is being managed by the municipalities. Now, under the Panchayati Raj institution, again, it's a three-layer institution. Mind it, it's a three-layer institution. On the top layer is the Zilla Samiti, Zilla Parishad. Somewhere it is called district, somewhere it's called Zilla. In some other states, it may call differently. But the concept is every district will have a Zilla Parishad, the district Parishad. Under that, we have the Panchayat Samitis. Basically, this comes from the blocks. So the Panchayat Samitis are there. And then the lower level is a Gram Panchayat. So this is the lowest administrative level. So Gram Panchayat, Panchayat Samitis, and the Zilla Parishad. Now, they may be called differently in different states, but the concept stays like that. Now, under the urban side, we have three types. It's not level, it's three types. Please note, there are three types. It's no level. So there is no hierarchical level in the urban side. In case of big towns or big cities, it is the municipal corporations. Now, municipal corporations are called in different languages in different states. Somewhere it is Mahanagar Palike, somewhere Nagar Nigam. So it's called differently. Now, after the big towns, the smaller towns are called the municipalities or municipal councils. Again, it is called in different languages, Pauro Shabhas, Pauro Samitis. So it's differently called. And the last type is the Nagar Panchayats or the town panchayat. Basically, the Nagar Panchayats and the town panchayats are in the fringe areas or in the transition area from the village and the rural, village to the urban. So they are called the Nagar Panchayats or the town panchayats. So this is the three levels. Now, which type of city will have a municipal corporation, which type of city will have a Nagar municipal council, or which type of city will have a Nagar Panchayat? These are all left to the state governments to decide. So all state legislations, municipal legislations will guide that what would be the size of these or of these bodies. Now, whether it is a panchayat structure or whether it is a municipal structure, there will always be a ward committee. There will be a Gram Sabha and an area Sabha. Now, that's the lowest level of group of people or an association of people, which are basically formed with the electoral rolls of that area. So these are the smallest. They are not the administrative units, but these are the participatory units of the people who are staying in that area. So basically, what has happened by this structure given by the Constitution, our governance structure has become more participatory than dictative. It's not a dictative structure; it's more participatory structure which flows from the bottom. So we and the makers, the framers of the Constitution believed in that. So there should be a participatory form of governance. And this is a structure that we are getting. So we are more concerned with the local government today in our discussion. So we will be focusing with these ideas. So keep these ideas in mind so that it will help in our discussion, in the further discussion. Now, coming to the brief history, I would be very brief in that. Now, basically the local governance or local government, which restricts to a very small area, or a local area, localized area, this has started long back. In fact, there are inscriptions, there are manuscripts, there are evidences that it started around 2300 before Christ era. And it can be traced to the Indus Valley civilization. So basically, at that time only, there were localized administration which were trying to deal with the local problems of the citizens in that place. We had forts, we had areas localized or marked, earmarked, something like that. Now, and also historians have said that there was used to be a type of a regular municipal government also, because there were well-planned streets, system of drains which were regularly cleaned out, and some sort of vigilance was there. So it was all there. So localized form of government used to be there, only it has changed its structure, the institutional framework, the legal framework. Over the years, this has changed. Now let's see what are the changes. Now basically from the Indus Valley civilization and until the time the Britishers came in, the Europeans came in, that period was also ruled by some rulers of the Mughal, the Rajputs, the Cholas. So they had also, these type of rulers also had some localized form of government where the concerns, the basic facilities and the concerns of the citizens were taken care of. But when the Europeans came in, they came with the European structure of government. And that's why in 1687, the first municipality was created in Madras Municipal Corporation. So that was the first time the Europeans, because the Britishers over there, they created the Madras Municipal Corporation, and that started the municipal governance in India. Now at that time, the village administration was not that focused, were not that organized, but still there are some village administration also, but these are not well documented. After 1687, about 50 years after that or 40 years after that, when the Britishers were there in Calcutta and Bombay, then the first Calcutta Municipal Corporation and Bombay Municipal Corporation were created. Now, these are all the European style of functioning that was given. And there has to be a royal charter, and the royal charter has a mayor's code. That's why today still we call the head of the organization of the municipalities to be a mayor. So that's the way the mayor, the ward, and the position came into the picture. Now, after that, by this time, when many other cities are coming up, and our freedom fight was going on, and etc., so many cities have started coming up, and the empire rule or the kingship rules were slowly dying down. Now, this city government started growing up one by one. But in 1882, the Viceroy of India, Lord Ripon, he brought the idea of a self-government and laid the democratic form. So the first democracy or a democratic form of local governments came in 1882 when the then Viceroy of India was there. And that's why today in India we call the Lord Ripon to be the father of local governance in India. And those who have visited Chennai might have seen there's a statue of Lord Ripon on the lawns of the Chennai City Corporation. So basically, he is considered to be the father of the local governance in India. Then, obviously, the Britishers were there in 1990. The Government of India Act said how a democratically elected government would be functioning. In 1935, first time, the local government was brought under the purview of the state governments, because at that time when the central government or the British government was ruling from Delhi, it was not possible to look into all the small local governments spread across all over the Indian subcontinent. Now at that time, Indian subcontinent include the present day Bangladesh, in the Pakistan. So in fact, the municipality which I'm working now with in Bangladesh, these also formed under that India Government Act of 1919 and 1935. So that was a part of India at that time. Now, after that, when this local government was taking a shape, then Mahatma Gandhi advocated that this administration should go into the village system also, and there should be a decentralized form of government. So therefore, that brought the idea of Panchayati Raj system, the Panchayati Raj institution. It started building shape. And the first Panchayati Raj system was in the state of Rajasthan and in Nagaur district on 2nd October 1959, on the birth anniversary of Mahatma Gandhi. Andhra Pradesh started the whole concept on a statewide level. So now the village administration was taking a concrete shape. So 50s and 60s and then 70s, there's all these 30 years or 40 years passed by where these structures were coming, states were making laws, many states started framing their legislations accordingly. So it went on. But the important thing happened in 1990s, during the decade of 1990. Now in 1990, when the economic liberalization was happening and we were becoming more global, then it was thought important that the cities and villages should be given their due rights and the due powers, because whenever I or anybody go to a place, he first hit a city or he first hit a village. Now, definitely it is within a state, definitely it is within our country, but where I'm going to a particular city. So therefore, the cities must create their structures, ecosystems in such a manner that that anybody visiting or anybody trying to invest in the city gets a feel of that city. So basically the period of liberalization and also opening up of the economy also brought these two constitutional amendments in 1992. Now the first is 73rd Constitutional Amendment Act of 1992, which got enforced on 24th April 1993. It gave the constitutional status. Now till that time, this 40 years since our constitution was enacted and adopted, now we did not have a concrete structure of the Panchayati Raj institution. Now this 73rd amendment gave this concrete structure to the Panchayati Raj, and later on the 73rd amendment was extended to all the tribal areas also by 24th December 1996. So by 1996, the entire Panchayati Raj institution got a constitutional mandate. Similarly, on 1st June 1993, the 74th Constitutional Amendment Act of 1992 was enforced, and it was brought into the picture. That gave the power to the urban local bodies. Now, usually this term urban local bodies, you won't find in the constitution, you won't find in any law, but that's a term that we use, urban local bodies and rural local bodies. But in the constitution, it is the municipalities. So the municipality is the word that has been selected by the constitution. So sometimes when we speak or when we articulate about these local bodies, we sometimes make a khichdi of a municipality. Sometimes we say urban local body. So kindly excuse me if I make a mistake, but in the constitution, it is always a municipality and the panchayats. Now, these two landmark initiatives of the government was basically built on the philosophy of Mahatma Gandhi ji, who said that if you have to make India a self-reliant country, you have to give powers to the last citizen standing in the cities and the villages. So the power, the democratic power must go down to that last citizen. Now, if that need to happen, then obviously the local bodies need to be strengthened. The area sabha and the gram sabhas have to be strengthened. So this was a philosophy that brought into this entire concept, inter values of these local bodies in the constitution. Now, those who are interested, please go through the constitution. I will give you some details over here, but I cannot give you the full details. But it's an interesting thing that happened in the 1990s, which actually opened up the whole gamut of this of the local bodies administration. Now, we now concentrate on the 73rd and 74th amendments and the local body taxation, because that's our subject today. So let's fix upon that. Okay. Now, the 73rd amendment added a new part 9 to the constitution, which have 16 articles. Now, this 73rd amendment was basically, if you read, it brought the entire panchayats into a shape, into a framework that need to be governed like that. So it has 16 articles, very well drafted 16 articles. One can go through that. Out of that 16 articles, I pick up one, that is Article 243H. Now, 243H basically gave powers to the panchayats for imposition of taxes and of funds. So the Article 243H concerns about the powers to impose tax and funds of the panchayats. Now, it clearly says, Article 243H, the legislature of a state may by law. Now, please note these few words: the legislation of a state may by law. Now, here I would stop for a second and say, or rather a minute and say, our constitution is very well structured in the matter of federalism. If you go through Article 246 of the Constitution, it very clearly says what is the role of the union government, what is the role of the state governments. It very clearly demarcates that. Now, if you read Article 246, you also have to read the 7th schedule of the Constitution. The 7th schedule of the Constitution basically comes up with a list of functions that the union government, the state government can perform. Now, they cannot perform anything outside that. So the list of functions are very clearly given in the 7th schedule to the Constitution. Now, if you read, or if anybody have already read the 7th schedule and Article 246, just to refresh your memories, there are three lists. There are three lists in the 7th schedule. List 1 is the union list. That means that list 1 very clearly demarcates or delineates that what the union government can do. It also contains what are the subjects on which union government can levy taxes. So basically the list 1 of the union list or the union list clearly says what are the functions to be performed by the union government and what are the taxation to be imposed by the union government. List 2 is a state list. Now, list 2 of the state list also provides like that, provides list of functions, what the state government can do and what are the areas of taxation where states can levy taxes. Now, union cannot do anything of list 2, states cannot do anything of list 1. It's very well demarcated. There is a list 3 called the concurrent list, which gives a series of functions which both union and state can do. Now, we are not concerned with the union list 1 for the time being. We are not concerned with the union in the list 3, that concurrent list. We are more concerned with the list 2 because the list 2 is the state legislature list. Now, in the list 2, administration of local bodies, that is panchayats and municipalities, are given in list 2. Therefore, the administration and management of local bodies are entirely with the state government. It is not with the union government. That's why the Constitution says the legislature of a state may by law. That means the union cannot pass a law, cannot enact a law which concerns the administration of the municipalities or the panchayats. It has to be the state. Now, so we now restrict ourselves to understand that the legislature of state can only enact a law. Now, they can enact a law as per 243H, as per the Constitution, which will authorize a panchayat to levy, collect, and appropriate taxes, duties, and tolls and fees, which state can assign to a panchayat such duties, tolls, and fees collected by the state government. That means the state government can collect certain taxes, fees, and tolls, and they can assign that. Assign means share that. So sometimes we call it assigned taxes, sometimes we call it shared taxes. So a part of the state government taxation can also go to the panchayats under the head of assignments. State can also by law provide grants in aid to panchayats from the consolidated fund of the state. Now, nowhere it is written Consolidated Fund of India. Consolidated Fund of India cannot be used to give grants in aids to the panchayats. It has to be the Consolidated Fund of the state. It can also provide for constitution of such fund. That means the state can, by law, can create any number of funds which will receive money and which will give money to the panchayats. So this is what 243H says. So Constitution very clearly says, states, you must by law, you give these powers to the panchayats. Now, most of the states have framed panchayat laws. As far as I know, a couple of states in the northeast, like Mizoram, because I have worked in Mizoram, I can say for that, Mizoram is yet to enact, probably yet to enact a Panchayat Act till now. They have a local government act that's a separate, but it's not a Panchayat Act. But all states barring few, very few, have all developed the Panchayats Act. Now, 74th Amendment. Likewise, like the 73rd Amendment, the 74th Amendment added a Part 9A. Now, Part 9A consists of 18 articles. Now, these 18 articles are all concerning the municipalities. Like the Part 9 is concerning all about the panchayats. Now, Part 9A and the 18 articles concerns everything about the municipalities. Now, out of that, we again pick up one, that is Article 243X. Now, 243X concerns the power given to the municipalities for imposition of taxes and fees and share of funds, etc., etc. Now, the language of these two provisions are very similar, so I won't go down to the details. But here also, since urban local bodies or municipalities are the subject of the states, is a state subject, only state can enact a law or can frame a law, and that law must authorize a municipality to collect, levy, and appropriate taxes, assign the municipality any shared taxes, provide for grants in aid to the municipalities out of the consolidated fund of the state, and provide for constitution of such funds for creating all monies. So basically 243H and 243X are very similarly drafted. The content and the intent of the provisions are very similar. So here also the state by law must allow the municipality to collect taxes. So one thing we should be very, very clear, local bodies or local governments cannot charge a tax on its whims and passions. They cannot do so. They have to be authorized or legalized by the state through a legislation. That means a local body may have autonomy to collect the taxes, but the enactment that whether they would collect the tax or not, that should come from the state legislature by a law. So here we must understand that between the constitution and the local body, there is a state government also, which by law must say. Now, if the law doesn't provide so, then no local bodies can collect any taxes. Now, this 73rd and 74th amendment, what happened? This basically changed the fiscal and revenue structure of the local bodies. Previously, they were all very scattered. They were not very concrete. They were not very molded. They all got scattered. Now, after the 73rd and the 74th amendment, the local body revenue source got a more formal shape. And now we can say they have a group called own revenue, OR, sometimes we call in short OR. Now, this OR or own revenue will comprise of tax and non-tax revenues. Then there will be a shared or assigned taxes from the state government. There will be a grants in aid from the state and the central government. Now, central government also provide grants, has been providing grants to the municipalities, but it is through the state governments mostly, because they usually the structure doesn't say that you directly pass on. But as I understand, some mission mode programs where some money has come directly to them, but it is again accounted in the state consolidated fund, and that comes to the municipality. So there are some I will not say deviations. There are some variations might be there, but usually it should be through the state governments because it follows that route only. And now there are some borrowings also. Now, local bodies by this law are allowed to borrow. Now, this borrowing can be from banks. This can be borrowing from some financial institutions like LIC, HUDCO, NABARD, etc. And there can be borrowings from financial intermediaries or international financial agencies like World Bank and the ADB and JICA and KFW. So these are the borrowings that come. Nowadays, urban local bodies, mostly the municipalities, have gone for municipal issue of municipal bonds also. So these borrowings have taken a big part because as you'll understand in today's presentation, that these municipalities are seriously starving of money, starving of funds, because the funds are not coming. And the growth in the funds are very limited also, because that is the focus of our today's discussion. Now, when this is not happening, they have to rely on some sort of borrowings from the financial institutions. But again, borrowings come at a cost, definitely. So they need to understand that what are the implications of borrowings and relying on their own funds. So we'll try to discuss upon that in today's discussion. But this is a structure for the time being. Now, out of those structure, we will be more concentrating on tax revenues, because our session is local body taxation, because taxation comes with the sovereign power. And if you go through the various local body standards that our institute have issued, there will be a standard on revenues. Now their revenues will be divided into two parts. One is called exchange transactions and one is called non-exchange transactions. Now revenues, when it is exchange, comes from exchange transactions. That means revenues are coming against giving of some services, exchange. There will be an exchange of service, and from that exchange of service, there will be a revenue. So they are called revenues from exchange transactions. The other part is revenues from non-exchange transactions. That means one gives a revenue, but the municipality or the local body is not bound to give any services against that. So these are revenues from non-exchange transactions. Now, tax revenues are revenues from non-exchange transactions. That means when a sovereign or a king impose a tax, he doesn't say, I'm going to give you back something. But at the same time, whatever taxes we contribute, they are all collated and taken together for general development of the place, general development of the city. Now, this had been followed from the Indus Valley civilization. So there lies the history, the concept of taxation and using the tax money for development of the area comes from the Indus Valley civilization. So this is nothing new. Taxation is nothing new. We should not say why we are being taxed. We had always been taxed, because otherwise the development of the area and the development of the place or the country or the state will never happen. Now, local body taxation obviously will concern about the development of the local areas. State taxes will consider the area of the state government's boundary, and definitely the union government will have a union boundary. So they are all demarcated. Now, tax revenues can be made. Sir, yeah, Shabani. Shall I break?
Sorry to interrupt you, sir.
Okay, I break.
CA Kamisha Soni, Chairperson, Committee on Public and Government Financial Management, is amongst us, and she will be throwing light on theme of today's webinar. CA Kamisha Soni is serving her third-year consecutive term in Central Council of Institute of Chartered Accountants of India. Presently, she is heading as the Chairperson of Professional Development Committee and Committee on Public and Government Financial Management of ICAI and Vice Chairperson of Ethical Standards Board of ICAI. She is also Independent Director of Ujjain Smart City Limited and nominated as member Madhya Pradesh Cooperative Audit Board. Being an outstanding professional and a committed member of the Council, she has been nominated as member to distinguished international forums for accounting professionals such as Technical Advisor International Ethics Standard Board for Accountants, New York, and nominated as member Committee on Government and Public Sector Enterprises Accounting of South Asian Federation of Accountants for the year 22-23. Having remarkable leadership skills, she has many firsts to her credit, such as distinction of being the first woman chairperson of Indore branch of CIRC in 2008-2009, subsequently the first woman chairperson of CIRC in 2010-11, and first woman chairperson of Board of Studies of ICAI in 2019-20. During her tenure as chairperson...
Just no need of introduction. Please, I would like to welcome. Thank you. A very good morning to one and all. On behalf of Institute of Chartered Accountant of India, as the Chairperson Committee on Public and Government Financial Management, welcome all the viewers to the webinar on Local Government Taxation Matter, Status and Compliances that is being organized in continuation to first virtual CP meeting held the similar theme on 8th July 22 under the initiative of Azadi Ka Amrit Mahotsav. So I also welcome our honorable speaker, CA Sumita Bray, eminent speaker from Kolkata, who has agreed to share his valuable experience with us on this dynamic subject. And really, sir, we welcome you. And this topic is very different for our chartered accountant also. So technicality are already there. And government is making sincere efforts to improve the accounting and public financial management system at all level of government in India, including local bodies. So ICAI and its professionals are also contributing to project the public interest and enhancing transparency in the financial operation of the government and playing an important role in nation building. So in this direction, ICI through its Committee on Public and Government Financial Management, generally sensitizing officials of various tiers of government in India by various means such as organizing workshop, developing relevant e-training material, and some training program also we have designed. Then also one role is generally we are submitting technical input on various document of Government Accounting Standard Advisory Board GASAB in India and internationally on the document of International Public Sector Accounting Standards IPSAS Board. And also we are running certificate courses on public finance and government accounting. Specifically, we have designed this course for this segment. And also we are formulating accounting standard for local bodies. And just I would like to share status of accounting standards for local bodies. So till date, 30 ASLBs have been issued by the ICI, including one cash-based SLB to facilitate transition from cash to accrual accounting system. Out of these, the ICI has mandated SLB2 cash flow statement and SLB5 borrowing cost and guidance note on accounting for investment for local bodies to comply with while auditing the financial statement of urban local bodies with effect from April 22. So even on the request of various government departments, the committee has recently opened its certificate course on public finance and government accounting for government official as well. So we have already started, and this committee is the first committee of ICI that is allowing the government official to participate in the certificate course. And we have also revised this certificate course and added certain other modules related to rural and Panchayati Raj. So our upcoming batch, 21st batch of the course, which is opening in August 22, is expected to be joined by few government officials also. Now about I would like to share certain important publication of this committee which has been launched recently in July 1st. So one is updated edition of publication on commonly used term in public finance and government accounting, covering modern latest terminology used in the arena of public finance and government accounting. So that will help various stakeholders in reading the financial statement of government in better manners. And second, also, I have already mentioned about, we have already revised our certificate course and we have added certain other material also related to government accounting and public finance. And also we have launched our new website of this committee and also one brochure related. We have covered all 360-degree related to this segment, detail of various websites, portals, and professional opportunity related all content we have added in the brochure. So member can take benefit of that brochure also and publications also. So dear members, chartered accountants are being engaged by various local bodies for various tasks such as maintenance of books of account, consultancy, advisory, auditing, budgeting, financial planning, tax planning, statutory compliances, etc. So today's topic, as you all are aware about, related to taxes. So taxes are essential for development of nation as it lies at the crucial intersection between the provision of public good, income distribution, social safety nets, and government accountability. And local body act as tax collector as well as taxpayer also. For example, certain local level taxes, property tax, some water tax, local taxes are also there in the nature of collections and liable to pay income tax and GST. So there is a need of improvement in procedure and documentation system prevailing in local bodies, such as effective use of IT, maintenance of up-to-date or real-time database, because so many regular circulars are issuing. So in today's webinar, we will try to understand how technology, proper procedure and documentation can support local bodies in taxation matters, including accounting and auditing of local government taxation. So I hope that you all would be benefited from the deliberations of the webinar. I once again wholeheartedly welcome all the viewers of this webinar that also comprises of officials of local bodies and members of ICI from PAN India who are learning online through this webinar. And you can also connect us, our previous webinar also through our digital learning mode. So thank you very much once again. And once again, I welcome you all and wish you all very happy learning.
Thank you, ma'am, for your enlightening words. Now I would like to request CA Sumitaba Ray sir to continue with the presentation.
Thank you, ma'am, for your nice words. Quite encouraging. Let's continue with the session. Thanks. I got a break of 5 minutes to rest my throat. Now, coming back. Now, today's particular session is about the local body taxation. So, as I've said, that the fiscal or the revenue structure of the local bodies have changed upon the enactment of the 73rd Amendment and the 74th Amendment. Now, it brought the concepts, or it made more specifics about the tax revenues, which comprise of property tax, vacant land tax, tax on animals, carts and carriages, octroi, advertisement. Now, please note, octroi and advertisement, I have tried to separate them out, specifically. Now, they were both prior to 2017. That means prior to 2017, octroi and advertisement tax used to be there. We will discuss about them later on. Then there are non-tax revenues, which includes fees, sale and hire charges, user charges, lease amounts. Then there are other receipts like lapse deposit, fines and forfeitures, law charges, etc., tools and hire charges. Assigned revenues would be there, that whenever a state government wishes, it can share a part of the revenues with the municipalities, which I've already discussed. They're called assigned or the shared revenue. Then there are grants in aids. Now, previously and now also we have the plan grants coming. Sometimes it's the capital grants or the revenue grants, which the upper tier government, say the central government, the state government, pass through to the municipalities or the local bodies for various projects, programs. Now, a lot of schemes, a lot of programs do happen every year. We are running through those programs. Then there are non-plan grants, basically to compensate against losses and some specific transfers. And then there's the borrowings, which I've already talked about. It can be from LIC, it can be from the governments, it can be from the banks, NABARD, then it can be municipal bonds, and it can also be the international agencies like the World Bank and the ADB, JICA. So, but all these are revenues, but we will concentrate on the tax revenue. Now, tax revenue sources prior to GST 2017. Prior to GST 2017, the local bodies were allowed to tax on land and buildings, which are called the property tax or the holding tax. There is to be a tax called octroi or entry tax, which is to be on entry of goods into the local area for consumption, use or sell. There is to be a tax on the consumption or sale of electricity. Then there is to be a tax called advertisement tax on advertisements other than advertisements published in newspapers and advertisement broadcast by radio television. That means any advertisements which are not in the newspapers and not which are in the radios and televisions and the cinemas, they are all to be taxed by the municipality. Now, to specify, tax on advertisements published in newspapers and advertisement broadcast by radio television was the prerogative of the union government under entry number 92 of the list 1 of the 7th schedule. So tax on advertisements on newspapers and televisions and broadcasts and radios were under the union government list. Okay. The other part was in the state government list, which was given to the municipalities. There is to be a tax called passenger tax, sometimes on goods and passengers that are carried by road or inland airways. So there is a tax. Still, there is a tax called passenger tax. Then there are tax on movement on animals and boats. There is a tax on some municipalities are charging on profession tax, trades, callings and employments. So there's a tax on that. And there's a tax including entertainment tax and luxuries, amusements, betting, gambling, which is sometimes called amusement or entertainment tax. So this is the tax structure of a municipality, which must be very, very specific upon. And again, to say, this is the structure which was prior to GST 2017. Now, the 73rd and 74th Amendment also brought in the concept of State Finance Commission. Now, we all know about Central Finance Commission. Every year, every 5 years, the Union government constitutionally appoint a Finance Commission, which does a detailed study about the state finances and the changes and the happenings, etc., the ecosystem, environment, everything, and then they come up with a recommendatory report which is being placed before the parliament and which the government accepts. Some recommendations may be accepted, some may not be accepted, but again, upon acceptance of the recommendations, the devolution of finances or the funds between the state government and the central government are basically based on the Finance Commission recommendations. Now, till date, 15th Finance Commission have placed the recommendation. Now, similarly, the 73rd and 74th Amendment also brought about the concept of State Finance Commission. That means states will also create a Finance Commission, and that State Finance Commission every 5 years will give the recommendations about sharing of funds between the state and the local bodies. So the states and the local bodies were under the purview of the State Finance Commission. Now, the details are definitely, you can go through Article 243I and 243Y of the Constitution, because these are constitutional bodies, and constitutionally they have to be framed. They have to be formed and they have to perform. Now, basically, the State Finance Commission will decide upon the distribution between the state and the municipalities and the panchayats of the net distribution of taxes, then the distribution of determination of how the taxes and duties should be determined. That also recommendations will be given by the State Finance Commission, and how the grants in aids will come from the municipalities from the consolidated fund of the state. Now, here I have only used the word municipalities, but Article 243I and 243Y are similar. So basically, whatever I'm saying about municipalities, it also means about the panchayats. So this is another thing happened, that how the sharing of taxes between the state and the panchayats, municipalities and local bodies will happen. So that are well covered under Article 243I and 243Y. Now, obviously, the Commission would provide recommendatory measures needed to improve the financial position of municipalities. Now we come to the impact of Gst Act of 2017 on the local body taxation. Now, I've already mentioned about the federal structure of our country, where there is a separation of powers between the legislature and the judiciary and the executive. Now, the division of legislative powers is very specifically given, as I've said, under Article 246 of the Constitution. I have also mentioned about Article 246 and the 7th schedule, and how the 7th schedule of the Constitution distributes the legislative powers, including taxation between the parliament and the state legislature. Now, I have already mentioned, I would not repeat, just to mention that the list 1 is a union list, list 2 is a state list, and list 3 is a concurrent list. Now, again, we are more focused on the list 2, the state list, because that list provides that all local bodies would be under the administrative control of the state governments. Therefore, the state governments have the full control, the full legislative powers over the local bodies in each state. Now, prior to the implementation of the Gst Act of 2017, there are 13 heads. There are 13 heads in the list 1 of the 7th schedule, which concerned about union taxation, on which Parliament enacts a taxation law. So before the 2017 implementation of Gst Act or the 101st Amendment Act, there are 13 heads in the list 1 of the 7th schedule, which covered union taxation. Now, similarly, there were 19 heads in the list 2 of the 7th schedule of the Indian Constitution that covered state taxation. So state taxation were provided under the 19 heads in the list 2. You can run down. I will also give you details of all the 19 heads, but I'm not covering the 13 heads of the union list, because those are not related to local body taxation. But I will pick up one only from that list, only one. Now, please note that any tax levied by the state government which is not backed by a law or which is beyond the powers of the legislating authority will be struck down as unconstitutional. So no municipalities, no panchayats, or no state government can impose any law which is not backed by a legislature for a legal document. So that has to be provided to have a legal framework for a law to be enacted. Now, as I already mentioned, as local bodies under the list 2, our focus area is list 2 only. But as I said, I will pick up only one from the 13 heads in list 1. I pick up entry number 92 of list 1. I pick up entry number 92 of list 1 that allowed union government to levy taxes on the sale or purchase of newspapers and on advertisements published therein. Entry number 92 concerned or it allowed the union government to levy taxes on the sale or purchase of newspapers and on advertisement published therein. So any advertisement tax used to be on in the newspapers, advertisement in the newspapers used to be taxed by the union government. Now what happened will come later on. The 19 heads of the list 2 of the constitution that covers state taxation are given here. Now again, I am not going into all the details. I'll only pick up the red marks, the red bold heads. Now all from these 19 heads, the red bold heads are actually been delegated to the local bodies. That means these taxation matters had been delegated to the local bodies by the legislature of a state. But the state should delegate this to the local bodies only by legislature, otherwise this states with the state government. Now what are they? Taxes on lands and buildings, also known as property tax. Tax on entry of goods into area for local consumption, that is entry number 52, which also known as octroi. This is entry number 52 of the state list 2. Taxes on the consumption of sale of electricity. Taxes on advertisement other than advertisement published in newspapers, advertisements broadcast by radio, television. This is advertisement tax, which is entry number 55. Now, I have not put the entry number against all. I have only put on some specifics and I have made it highlighted by an yellow color. Entry number 52 is taxes on entry of goods into a local area of consumption. Entry number 55 is taxes on advertisement other than advertisement published in newspapers. Then we have taxes on goods and passengers, taxes on animals and boats, tolls, taxes on profession, trades and callings. Taxes on luxuries, including taxes, are covered under entry number 62. Again, I have made specific references of 3 entry numbers, 52, 55, and 62 of the state list, and entry number 92 of the union list 1. Now, what happened in GS after the GST implementation? By the 101st Constitutional Amendment Act, both the entry number 92, entry number 52 of the state list, entry number 55 of the state list stands deleted. That means the basic purpose of the GST Act was to subsume as many indirect taxes as possible. Now, upon this subsumation, entry number 92 is no more in the union list 1, that has been subsumed by the GST Act. Similarly, entry number 52 octroi and entry tax and entry number 55 of advertisement tax also got subsumed into GST Act. Therefore, technically, the union government cannot levy taxes under entry number 92, and states cannot, or local bodies cannot levy taxes under entry number 52 and entry number 55. Entry number 62 has been amended to some extent. It is there, but it has been amended to some extent. Okay. Now, if you look into the Goods and Services Tax Compensation to States Act 2017, that is Act number 15 of 2017, if you refer section 51E and 51G, it also says that if any local bodies or if any state governments was levying cess or surcharge on entry number 55, that also stands subsumed under GST. That means entire thing upon 55 has been subsumed under the GST. No cess, no surcharge. So the entire concept of the paradigm of levying taxes and fees and taxes by municipalities on octroi and on display of advertisement hoardings have been omitted now. So these taxes are no more there. So the states, obviously under the delegated and the local bodies in the delegated power cannot levy taxes on these, and union also cannot levy. So this is a change that has happened. We keep this change in mind. Now, status of municipal finances in brief. Now, very briefly. Now, one thing I must tell you, it is very easy to find data on companies. It is very easy to find consolidated data on other bodies, institutions, because they are all very tech savvy and etc. It is very easy to find data on state government finances also, because Reserve Bank of India regularly publishes state finances reports. But it is very, very difficult to find any data consolidated data about all municipalities or all panchayats in India. It's not so easy. It's a very Herculean task because this type of data consolidation has never happened. The platforms are not there. There's a lack of information technology structures there. So it's very difficult to say how much property tax we collect in India. It's very difficult. It's a very difficult subject to discuss. But some study groups, some organizations, some NGOs do continue these studies. They try to collect as much of data as possible. Now, I refer one of such studies by ICRIER done in 2019. Now, which has tried to consolidate all the financial data of municipalities. Now, it was still possible for municipalities, but I don't know whether it's at all possible for panchayats in India or not, because so many panchayats are there. Its data consolidation is a real difficult task. Now, what we have seen that municipal revenue constitutes a very small, less than 1% of GDP between 7-8 and 17-18. So, though all functions and all activities are happening in the cities and towns, all offices are in cities and towns, all factories are very near to the cities and towns, but the contribution to the GDP from municipal revenue is meager 1%, less than 1%. Now, if you see the same ratio in other countries, it is 4.5% in Poland, 6% in South Africa. In Brazil, it is 13.9. Then 13.9 in UK, 14.2% in Norway. So basically, we in India are not contributing anything from the municipal revenue to the GDP. Now, this is a major setback, major fallback. Okay. Now, if we compare the municipal own revenue, we talked about municipal revenue, but we talk about own revenue, a percent of GDP, which is only 0.43%, and it's declining. It's not even increasing; it's declining. So we have a lot of issues in the municipal own revenue fund structure, and this own revenue basically constitutes the tax revenue and the non-tax revenue. So the tax revenue are the major focus. Now, if we compare the combined tax revenues of center and states, we have seen it has increased from 16% in 10-11 to 18% in 7-8. So there is an increase as a percent of GDP. But when this municipal tax revenue is to GDP, it is showing a decline from 0.3% to 0.25% over the same period. So actually, the municipal taxes are not buoyant. They are not giving the revenue that it should give. Now, there are very many issues. Very many issues here which can be discussed, some of which we will be maybe discussing today, some of which we may not be able to discuss today, but we have to find out. Now, property tax happens to be the major tax in the municipal portfolio. Even the panchayats are also levying taxes, but they're too meager to discuss upon. But panchayats are mostly dependent on the revenues that the state governments are giving. There are no structured system of taxation in the panchayats. But the law says it can do that. Okay, so property tax are basically contributing 60% of the municipal tax revenues. So property tax happens to be the most important tax that need a discussion. So we will concentrate on the property tax mostly in today's discussion. Now, property tax revenue as a share of GDP is only 0.15%, and is far below the 1% estimated for the recurrent taxes. So it's really in a dismal situation. Non-tax revenues comprise of the user charges and rentals, etc., which has increased significantly from 33% to 41%. So basically, the non-tax revenues are increasing and the tax revenues are showing a decrease. Now, as I've already said, non-tax revenues are from the exchange transactions. That means people pay and get a service. So whenever people are told that you have to pay the taxes, either they are not paying or that willingness to charge from the local bodies are not there. So it's basically becoming an exchange transaction scenario where you pay for your service and we are happy with the service. But again, whatever the citizens are paying for the services, they are grossly cross-subsidized and not properly valued. So the costing of services are not being done properly to say that they are paying the exact amount which the municipality, the local bodies are actually spending to provide the service. Okay. Now, vis-a-vis to the municipal revenue, if you look at the intergovernmental transfers are declining on a declining portion of the GDP. Now, basically, it was 0.45% of the GDP. Now, by contrast, if you look at the central government to state government, that is 7.23%. So 0.545% of the intergovernmental transfers are going to the municipalities or the local bodies, and 7.3% to the state governments. So intergovernmental transfers is also an area which needs to be looked into by the state governments and local bodies seriously, because here only the idea of the state finance commissions was brought into. But unfortunately, as I have seen, it's my personal view, I have not seen the state finance commissions are being constituted regularly, or they're giving reports regularly, like the way the central finance commissions are providing. So this is an area which needs to be looked into. Now, municipal expenditures in 2011-12, it was 0.81% of the GDP, which accounted for half of the total expense in the urban sector. And by the parastatal, including the parastatal, it comes to 1.59%. Now, municipal revenue expenditures, if you go by the estimates, it is only spending on cities at $50, and which is $362 in China, $508 in South Africa, 1,772 in UK. And per capita expenditure is abnormally low in India. It's only $50 compared to 1,772 in United Kingdom. Therefore, we are not able to spend more for the city's development also. Now, annual capita urban capital expenditures, again, if you compare, it is $17 in India, which is against 116 in China and 391 in United Kingdom. So basically, until unless we have the revenue base, it is not possible to spend on any expenditure, the municipal expenditure. Now, this is another snapshot of the municipal finances, that the total financial per capita in 2007-8, because again, this is an old data. As I told you, new data is very difficult to find out, but we can understand the gravity of the problem. In per capita terms, it stood at 1,430 of revenue income and 1,513 of expenditure, municipal expenditure. So, I mean, these are the problems of the municipal finances today, and these problems are basically shooting out of the lack of buoyancy in the taxation matters. Now, let's see how the taxation matters can be improved. Now, as I have told you very clearly, that property tax happens to be one of the most important taxation of the local bodies. So let's concentrate on the property tax. Now, property tax, as I've already told, it's a type of a non-exchange transaction for the ULBs. Now, growth in the revenue from property tax has not been commensurate with the potential that we have in India. Now, I mean, if we compare the structure of the income tax, the amount of income tax that we collect, and the GST that we are paying on goods and services. Now, if you compare the property tax, now that amount of property taxes are very low in India. Now, there are very many reasons behind that. We cannot discuss all reasons because many of the reasons are sensitive to discuss on a public platform. But we can say there are inadequate policies, there are legal problems, and there are inefficient administration. Because the way the income tax structure has evolved over the years, the income tax administration has evolved over the years. The GST, which is very recently included, but again, the evolving structure of the GST implementation, these are all very robust. These are all very structured. But the same structure and the same philosophy or the same effort is missing in the case of property tax. Now, we cannot disregard property tax because property tax is as important as income tax and GST, because with the collection of property taxes, the local bodies will be only able to provide good roads, will only be able to provide water, will only be able to provide drainage, the solid waste management, cleaning of the streets, cleaning of the parks and playgrounds, maintaining of the parks and playgrounds, the urban forestry, the rural forestry, soil conservation, irrigation, so on and so forth. In my other certificate courses classes, I've already discussed that the 7th schedule of the Constitution provides a provides a schedule. The Constitution provides the list of the 11th schedule and the 12th schedule, which clearly gives the functions to the municipalities and the panchayats. Now, all these functions have to be provided by the municipalities and panchayats. Now, where from they will provide that if they do not have the sufficient funds? So the sufficient funds must come from property tax. It is not always the exchange transaction. It has to be this non-exchange transaction. Now, in 1718, when ICRIER has done the study, they have found that the property tax in own revenue was seen in Karnataka to be the highest at 68% and the lowest in Punjab at 9% among all the major states. So the contribution of property tax to the own revenue must increase substantially. And here it is not only the philosophy or the idea or the consultants or the chartered accountants can help. Here the local bodies have to understand this very carefully, because until unless you collect the taxes, you will not be able to provide the services, because this is an important lesson that we have learned from the Indus Valley civilization. So taxation is nothing new. It is an old form in a new manner. So taxation is not a problem that some elections will be lost or some political parties will not come to power. It's not that. I mean, I am making this statement on my own whims, on my own articulation. I'm not taking, but it has to be understood so that willingness to charge tax is also there from the urban side, because people will always be eager to pay a little bit of extra money if they're willing, if proper developments happen. Now, what has happened to the property tax over the year? Most importantly, there was a conceptual drawback. Property tax used to be levied under the method called annual rental value, ARV method. Now, those who know about ARV method, annual rental value method used to be a method where municipal officers used to go and decide that if a property is owned by someone, what is the expected let out value of that property in that area. That means when that same type of property in that same locality, how much it will fetch. Therefore, to understand that, they have to go to some other property of similar place, similar size, similar area, similar quality, and find out what is the amount of rent it collects. Now, suppose if it collects 8,000 rupees per month rent from a tenant, then the property which is self-owned, that will also be valued at 8,000 rupees per month. Now, this reasonably letting out value from year to year, basically it came the base point of the annual rental value calculation. So how they will calculate the annual rental value? They will find out the expected rent that the property will earn. Now, if that expectation is not there, then some ad hoc figure or some figure will be put into there, and then some surcharge and rebates will be allowed. Then on that amount, some property tax will be calculated on annual value. So this was the annual rental value. Now, this method had become very, very subjective. Now, nobody used to understand how it is being calculated, how it is being done. Now, this was one of the major reasons why the property taxation system has not grown substantially. Now, there were legal hurdles. Obviously, the administration was poor, which made the property tax inelastic in most of the municipalities. But soon after the passing of the 73rd and 74th Amendment Act, from 2000 onwards, a lot of reforms started taking place in the urban local bodies, because 6-7 years after the passing of the municipalities of the Amendments Act were given a time, because states have to enact laws. So many states enacted laws between that period from 93 and 2000. Now, from 2000 onwards, the reforms started taking place. Now, one of the major reforms were the fiscal reforms. And under the fiscal reform, the property tax reform was given the most priority. Now, in 2000, we had a scheme called URIF, Urban Renewal in Infrastructure Fund, URIF. Now, after URIF, the JNNURM came, the Jawaharlal Nehru National Urban Renewal Mission, and thereafter the Amrut and the Smart City came. Now, since 2000 until 2022, a lot of efforts were taken to reform the property taxation system across India. Now, one of the things that the whole property taxation system was trying to rely upon was the unit area method, the UAM, That was adopted by Patna Municipal Corporation for the first time in 1993. Now, basically, this method was very, very scientific, and this method was not only being appreciated by the Supreme Court of India, but it was appreciated by the United Nations also. Now, under this method, it was a more simplified arithmetical method. What used to be done? Suppose the city has got many pockets or many areas. I will not say wards, many areas. Say if I take the example of Delhi, the Connaught Place area, the Indraprastha Marg area, the ITO area, maybe then maybe the East Kolkata, Greater Kailash area, something East Delhi area, Greater Kailash area. Now these areas were marked. Now when these areas were marked, then the effort was seen that what are the facilities are provided in that area. Some areas would be very posh, would be giving very much good facilities. There may be a good shopping mall, a good market, a fish market, a vegetables market, a good parking areas, etc., etc. And some areas would have very bad infrastructure yet to be developed. Now all these areas were taken, the quality of the area were taken, and they were assigned a guidance value. So a unit area value fixed for every area. Now some areas got say 20 rupees per square foot. Some areas got 2 rupees per square feet. Some area got 80 rupees square feet. All hypothetical figures. Now then, when that area is assigned a value, a guidance value, which is also called the unit area value, then the property area is being measured. That what is the area of that property? Suppose that area of the property, say across all the floors, is 2000 square feet. So 2000 square feet multiplied by the unit area value, that gives your annual value of the property. So annual value of the property now becomes more arithmetic and more simplified. So everybody knows if I'm staying in Greater Kailash area, or if I'm in Calcutta in an Alipur area or Salt Lake area, then I know this is the guidance area value of my area. What is the area of my property, building area? This I know from my land records and from my building records. I multiply it by that figure, then I get the value. So there is no question of any subjectivity now. So this is the unit area method that was thought about, and this is the reforms that is being taken place, and this is still going on. So tax for the particular area then is arrived by multiplying the unit area value. Now, when you are multiplying the unit area value, there are also certain other factors like occupancy, age, structure, and use. Occupancy means if it is suppose hypothetical figures, suppose if you are occupying yourself, that means you it's your own accommodation, then the entire thing may be multiplied by 1. If you have let it out for some purpose, then it can be multiplied by 1.5. So as soon as occupancy changes, your property value will go up. Your tax will also go up. Age. If it is an old property, say 50 years back, the entire thing may be multiplied by 0.5. That means the entire taxes change, come down. If it is a new property, recent property, it can be multiplied by 1. Structure. If it is a pakka structure, all RCC construction, it can be multiplied by 1. If it is a partly RCC, partly tiles or roof is our tin sheds, it can be multiplied by 0.75. Taxes come down. If it is a jhopri, it can be further reduced, say multiplied by 0.5. And use, how you're using it. Whether it is for industrial use, for commercial use, it's a hotel, etc. Again, factors change. So this brought a lot of transparency into the system. Now, I have used all hypothetical figures just to explain. I don't know how successful I'm explaining in such a short time, but this is a change of the unit area method that was brought into. So now the annual value of the property used to be calculated, and many municipalities have started adopting this. I know Delhi is doing it. Bangalore has done that, but Bangalore's calculation is something a little bit different. They use a construction cost formula, but again, the details are there. I mean, but it's easy to calculate, not that rental value method. Okay. Now, how information technology can help. Now, this is a picture that I'm showing you. Is basically in one place where I worked on this subject. Now, one information technology which can be brought into this thing is a GIS mapping. Now, GIS mapping is a very important tool, an IT tool, which can be brought into the property taxation matters. Now, what a GIS mapping will do, that will create a total satellite, take a total satellite image of the area and mark every property. That means every property will be marked, the vacant portions will be marked, and etc. So now the the officers will able to know, the urban officers will be able to know which are the properties are there, because previously many of these informations were not available. Some may be constructing a property, they never knew. I won't say is an illegal or an unauthorized, but some may be constructing 2 floors. Maybe the plan is for 1 floor. Maybe constructing 7 floors when the plan is for 5 floors. So these type of information can be captured by the satellite image and can be put into the system. Now, after putting the whole image into the system, one can do many different types of studies, and layers of information can come and you can put into the system. I will show you one. Now see, this is one word. You can see the satellite image on the left hand side. The satellite image of the properties are there. Now this, again, I would say this is one of the most important IT tools that is being used now across India, across the subcontinent, to improve the property tax revenue. Because here, one of the administrative problems were that lack of information, and information was outdated. So information has to be modernized on a modern tool. No, again, I'm using this because I've walked in this city in Gangtok. So it's a hilly town. It was very difficult to find out because many of the properties were under the trees, under the cloud cover, sometimes the fog. So it is very difficult. But the thing was that there was a proper survey done to collect all information and to put in all the information in the system, so that the information of the properties are there. Like in income tax, now today we have a PAN, we have a structured system where all our information are going in against the PAN or going against the Aadhaar. So similar concept was used over here to give every property a unique number. So every property was given a unique number, and all information were stored into this particular unique number of the property. Now, upon that, also it was decided that there has to be a self system of calculating the tax liability. That means we do our own self assessment for income tax. We are doing our own self-assessment for our GST and VAT and others. So there has to be a similar system of calculation of tax liability. A self-assessment system has to be there. Why I have to wait for the demand notice to come? Why cannot I go to the municipality and pay the taxes? So a self-assessment system of paying taxes should be there. Also, the taxation structure should be done in such a manner that there should be a buoyancy and elasticity, so that there is a revenue growth. I should not, or rather, the policy should not be that we keep a tax structure such rigid, such far-fetched, which the common people will not be able to go and meet that thing. So there must be a buoyancy and elasticity in the tax structure also. There should be a system of rewarding the honest taxpayers and penalizing the defaulters, because we have seen from my experience, I can say the major defaulters of property tax always used to be the big property owners. They used to always default on the property tax, and the middle class people and the low end people always used to pay their property taxes on time. But the big property owners were always the defaulters. So there has to be a system where the big defaulters or any defaulter are brought into the net, so that the revenue grows. There should be a proper information system for monitoring the coverage of assessment and collection of tax dues. Now remember, property tax is very much like income tax. This is some sort of a direct taxation. Property tax and income tax are direct taxation. So we can all have the method that we in income tax properties the same way of more friendly, more online payment facilities has to be allowed. In India, it has been, I have seen from my experience that in most of the properties we'll find the senior citizens are staying, our grandparents are staying, because most of the sons and daughters are all away in some other cities or other countries. The properties are left with the senior citizens who have to maintain the property. We have to pay the taxes. So if the systems becomes user friendly and more IT systems, payment gateways are allowed, then the sons and daughters can pay the property tax dues from any place in the world. So that will help the senior citizens to clear their dues also. So the municipalities must think on these lines. It's very, very important. And definitely there has to be an efficient mechanism for speedy grievance redressal and dispute settlement, because in some cases dispute settlements take long years, and it goes to the court and appellate tribunals, etc., etc. So the system of grievance redressal must be thought into. Now, this is another way to digitize the records. I'm showing some pictures where the property records were collected on mobile apps, and they were stored in the municipal servers. So the system of collecting information on a regular basis from the properties, the changes can be put into the server, and the database can be updated on a regular basis. It should not be on that pen and paper style. It can be modernized. So these type of modernization can take place through the IT mechanisms which we have, but it is very, very important that these IT measures are adopted, because once the data is being collected from the field and from the satellite images, then that data can be used to generate the property demands, or it can be self-assessment method also. Now, this is the output of the GIS mapping. Now, if the plots, each properties are marked and each properties are numbered, and then if the municipality click on some property, then the details of the property, who is the owner, how many floors are there, what is the where the property is located, etc. All details can be there. Now, I mean, the layers of information can be various. I mean, municipalities or the local bodies can think about the layers of information they want to hold, they want to store. So this can go on and on and on. So, I mean, there's no dearth or there's no scarcity of information holding. Only the effort need to start on these IT platforms. Now, also, this part is payment of taxes. One need not go to the municipality to pay property tax. This is a software being developed, or a portal being developed by the government of West Bengal. I'm just showing as a picture. Now, I know many of the states and the municipalities have already done that. Now, they need to update on this. They need to put these records more robust, in a more robust manner, more holistic manner. Once these data is linked with the GIS database, then the whole things becomes very confirmed, or a more concrete. Now I move to the other part of the revenue, that is advertisement revenue. Now, I won't call it advertisement tax now, because basically the advertisement tax, that particular word has been deleted, that particular taxation has been deleted by the constitution. So we cannot say advertisement tax. But the problem that we have in hand is that these advertisement boards, which we see in our cities and towns and everywhere, now these used to be managed by the municipalities or the panchayats, and the revenue they used to get from here. Now, previously, obviously, this used to be called the advertisement tax, but now it's no more advertisement tax. So question comes upon that, shall we stop charging the tax, or shall we stop putting up the boards? So there is a debate. Now, I won't go into the debate, but legally speaking, if municipalities want to continue charging something from these billboards, from these advertisement hoardings, then they have to come up with some other terminology. Now, basically, it can be revenue from advertisement hoardings. It can be a planning concept that to make the city look good, we have to have proper hoardings and proper structures. So, but the revenue must come to the municipalities, because till now they had been getting this revenue. Now, if the municipalities have to sacrifice this revenue, this will be too much, because this is one area which will always give a buoyant revenue to the municipalities or to the local bodies. Now, as we understand, advertisement is a audio or a visual form of market communications. Now, what advertisement we are concerned with? We are concerned with the out-of-home advertisement or outdoor advertisement, because we are not concerned with the advertisements on our mobile phones or on our internets or on our or on our cinema halls, or not cinema halls, on our mobile phones or the newspapers. So these advertisements we are not concerned with. We are only concerned with the advertisement or outdoor advertisements. Now, as we all understand and seen, these are the street furnitures we call, like the street furnitures that we call like the bus shelters or the news racks or the mall kiosks or the telephone booth. They have all advertisement hoardings put into them. Even if you go to any go by any roads, we will find the kilometer signages. Now, one side of the kilometer signages will have the kilometer notifications. On the other side, there will be some advertisement matter over there. Now, these are all used to be charged. Mostly, if it is a municipal area, municipal road, it all used to be charged by the local bodies. Now, again, there is a confusion. I mean, confusion in me at least. There is a debate, an argument that after the imposition of the Goods and Services Tax Act, what happens to the advertisement tax? So, can they call it differently and charge, or will they not be allowed to charge? So I'm not very sure, but again, this is a revenue that they used to earn. Okay, now, so the advertisement revenue will always be the second category after property tax for details. Now, I mean, this is some of the pictures from some cities of across India where we'll see advertisement boards and hoardings everywhere. Planned, unplanned, on rooftops, etc. But these need to be regulated, and this regulation power is with the municipal bodies or the local bodies. So definitely, any regulation cannot be free. There has to be given a chance to impose some sort of a fee or a revenue from this regulation. It can be regulation fees also. Now, likewise, property tax, this can also be brought into the picture, where again, these hoardings can also be put into a GIS map. Now, when these hoardings are put onto a GIS map, then at least the municipality will be able to understand and know where are the locations of the hoardings, what are the details of the hoardings, where the hoarding size. I mean, everything, all details can be put into, because again, this is an area where not much happenings have happened till date. But one can easily think about these particular concept or a particular area where the hoardings can be brought into the picture, and these hoardings definitely will provide a lot of revenues. So just you can see on the two sides, there's a GIS map of the hoardings of a road in a town, Ludhiana, where I could get, I mean, where I walked and I got the details, and I'm showing it to you just to give an idea that how this has been done. So all hoardings are marked. So you can see on the bottom side there is a road which is a very important road, and lot of hoardings are there. So basically, this road is a very important road, and all advertisers have put their hoardings over there. So this is also an area, also a thing that we should note, that where the hoardings are more, where the hoardings are less, because the city has also need to look nice. Now coming to the procedures and documentations of improvement, there are various ways this can be done. As I've already said, that the proper mapping of GIS properties can be used on a GIS platform. Now, most importantly, by doing this GIS platform use, we can bring all the properties into the TaxNet. There are many technologies available which I've discussed to bring these properties into the TaxNet. And as soon as this is done, and the efficiency in the tax administration is achieved by improving in the coverage, billing, collection, and enforcement. Obviously, the procedures need to be changed, the laws need to be revised, the policies need to be revised, the assessment need to be made more transparent. So these can bring a lot of changes in the whole procedures and documentation also. Now, one thing that I have noticed over the years while working in this fiscal management is that all states prefer to include many rebates or many what we call classes of rebates. Now, this subjectivity and the elimination of those rebates and these deductions must be there. Discretions in assessment must be reduced to a large extent, because unless the discretions in assessments are reduced, they are not, if not, they are made more objective. One cannot achieve the objective of increasing the revenue from property tax and other taxes in local bodies. Now, at the same time, we also have to see that the inequities in taxation must be reduced, because that is one of the major canons of taxation. that taxes should not bring inequity. There should be equality in all respect. The equity must be maintained. So these are the few concepts that need to be built into the procedures. Now, again, to say information technology has helped a lot in improving this in these details. This can be improved upon a lot. Only some efforts has to be exercised by the municipal and the local bodies. Now, as I've already mentioned, that one of the procedural improvement can be through by doing a property survey for detailed survey, and this should not be a once in a lifetime. It should be conducted every 5 years or 3 years on a regular basis, so that new properties, changes in the existing properties can be brought into the system, can be brought into the records. GIS mapping should be done on a regular basis. Every 5 years or 6 years, this mapping should be changed, should be updated, and the database of the properties must be correlated or linked with the GIS maps, so that the digital property maps are available, and it should ensure that 100% of the properties are covered by this digital mapping and the database. Now, so the most important, again, I would say the information technologies are there. The softwares are available. Very many softwares are available. I mean, I'm not a software expert, so I cannot say which software should be used, but GIS mapping should be linked to some MIS software to create the database. Because today, as I would say, the PAN and the Aadhaar are very much used in correlating the data, because that's a unique feature of the PAN and the Aadhaar that has correlated the data across the country. So similar efforts should be done in the area of property tax also. And obviously, the guidance value or the unit area value after the physical completion of survey is a matter. That's a policy matter. Every municipality must sit, officers must sit and decide the guidance value. And definitely the software development and the management of the new taxation system is also an important thing. Now, also, one need to understand the procedures need improvement in the introduction of taxes, that the citizens can assess their own tax demand and submit the taxes, that I've already mentioned, that it has to be self-assessment, self-paying. Inspectors should not go to the properties, rather the people should pay it from their own houses. So that should be the system environment created of the taxation system. The application software to be developed must give the demand collection balance module from the self-assessment. That means everybody should know that how much dues they are left with, how much they should pay. The installment system facility must be there. Stakeholder consultation is an important thing, because until unless the people and the citizens are consulted about the changes in the new system, it's very difficult to impose a new system. So stakeholder consultations, education programs must be thought of. That must be put into the system. As I've said, reductions and elimination of exemptions are also important, because exemptions and eliminations are not very good for any taxation system. As many reductions and eliminations we do, it's better for the taxation system per se. Also, I've already mentioned about creating a public grievance handling system. It's important that a grievance handling mechanism is there, because any new taxation system will bring a lot of grievances. So that need to be taken care of, that need to be handled. Taxpayer education programs must be thought of, and periodic assessment for the guidance value. Now, for advertisement, there are a few things that need to be thought of. Is that recommendation for a destination-based advertisement fee as a user fee. Destination-based means if some roads are very busy and many advertisement hoardings are there, the advertisement hoarding rates for that area, for that road must be higher than an area where less people travel and less people frequent. So destination-based should be there. It's not should not be a uniform rates across the city. So that will help in the advertisement revenue to go up. Identification of sites for potential advertisement hoarding, that's very, very important. It should not be come up in any area they like. More importance should be given for digital advertisements, because digital advertisements actually take less space. They are more focused, and they are less use of paper and other materials which are environmentally harmful. So digital advertisements are more to be taken care of. Areas which are prone for illegal advertisement or hoardings, that should be taken care of by the management. Market assessment for understanding the commercial rates, what should be the rates for outdoor advertisement in a particular site, that should be thought of. These are the procedural changes. The gaps in the current system of allotment of advertisement sites must be seen, because more auctions and more tendering processes are developed into the system. That will bring more revenue to the municipality. And any gaps that are there, because I am giving you a generalistic idea, some specific gaps I need to be identified at the site, so that need to be done. Now coming to the accounting and auditing of the local government taxation, that's the last section of our discussion outline. Now, I have already discussed in my other sessions about the accounting and auditing part, but since it's an accounting and auditing of the local body taxation, just to give you an idea, very briefly on the accounting and auditing part of the municipalities or the local bodies, please refer to Article 243J. 243J is under the Part 9, which concerns the panchayats. It clearly says that the legislature of a state may by law make provisions with respect to the maintenance of accounts of the panchayats and auditing of such accounts. So therefore, the constitution itself very clearly says that the state is responsible for the accounting and auditing of the panchayats. So very well clearly defined, the legislature of the state must provide this direction. Article 243Z under the Part 9 A of the Constitution says the same thing for the municipalities. So Article 243J is for accounting and auditing of panchayats, and Article 243Z is for the municipalities. But the problem is that these two articles end only over there. I mean, there are very two specific lines. But how the audit and accountability system has to be developed, or the accounting system is developed, these are not very clearly defined, and they are left to the state-specific laws. And this made the system, or this made the whole thing little complicated, or rather very elaborately confusing, because all states will come up with their own laws, obviously. So everybody will have their own laws for audit and accounting. So we cannot have a uniform accounting system across all municipalities and panchayats. So this is a little tough decision. It is not like our companies who follow the Companies Act across India. But the 11th Finance Commission have very clearly said that there has to be an accountability and audit mechanisms of local bodies. So basically from the 11th Finance Commission, these type of ideas have come up. Now about the auditing part, we can say that in the states, all states except West Bengal, Bihar and Jharkhand, the audit of local fund is conducted by the Director of Local Fund. So all states, the audit is being done by the Director of Local Fund, except in West Bengal, Bihar and Jharkhand. In West Bengal, Bihar and Jharkhand, in these three states, audit is being done by CNAG. So CNAG is directly doing the audit of these three states, including Panchayat Raj and the ULBs as the local fund auditor. So like in Kolkata, where I work, the audit is being done by the office of CNAG. So CNAG is doing for these three states, and for other, it is the local Director of Local Fund Audit, which is doing. So this is the audit mechanism. Now for the accounting part, in the urban and local bodies, as we understand and we have discussed in other classes also, because this is a very big area, vast area for a discussion. So all municipalities and panchayats had been following the accounting principles by the state laws prior to 1890s. They were all following that, but after, they were following the cash basis of accounting. But after 73rd and 74th, when the local bodies were allowed to implement the 73rd and 74th amendment, and the 12th Finance Commission gave recommendation that everybody must migrate to accrual-based double entry accounting system by all municipalities, but not to panchayat, by all municipalities. Slowly, the concept of municipal accounting started changing. A lot of changes have happened from 2000 onwards. In fact, from 2000 onwards, many events have occurred, like the Honorable Supreme Court has indicated of allowing accrual-based accounting methods in the case of Almitra Patel, because this particular case, when decided by the order of the Supreme Court, Honorable Supreme Court, allowed the CNAG to form a task force, and that task force brought the concept of National Municipal Accounting Manual. They have developed a National Municipal Accounting Manual for adoption by all states. And this National Municipal Accounting Manual prescribes accrual-based accounting and a double entry accounting system. Now, these conditions were also put into the various schemes like Amrut, URIF, JNURM, UID, SMSMT to maintain the accounts under the accrual-based DES. The 13th Finance Commission also recommended that accrual-based accounting. So now all recommendations of finance commissions, the Supreme Court, the CNAG, the Government of India allowed or rather enforced the state governments to adopt the double entry accounting. Now, almost all states have started, barring a few states which are still in the process of doing this double entry accounting in the municipalities. Panchayats are a little different. Panchayat accounting is totally cash-based double entry accounting. It's not accrual-based double entry accounting. Now, also these bigger municipalities started accessing loans by multilateral funding agencies like the ADB and the World Bank. So they have started accepting the loans, and one of the loan covenants is always the better accounting records and accounting books. Now, as I've told in other sessions also, probably some of you are repeating this session. Now, there is a separate effort being carried out at the municipal level that to convert or to migrate their accounting system, reform their accounting system to double entry accounting, which we all know that whenever a transaction occurs, there is a dual effect, and both the sides of the dual effect has to be recorded. That's double entry. Previously, it was a single entry. Only the cash and the personal accounts were recorded in the cash books. No other details were recorded. At the same time, the migration is also to accrual-based accounting method. Accrual-based accounting method, we all know that we record the transactions irrespective of whether the actual receipts or payments take place or not. So both the double entry and the accrual-based methods were brought into the concept, and municipalities have started following that. Now, just to run the idea that what are the benefits, we all know that the accrual-based DS have a lot of benefits, which the municipalities have started adopting. It maintains complete records. It records in a scientific and a systematic manner. Arithmetical accuracy through trial balances can be maintained. There are acceptable formats of the year-end financial statements. Balance of assets and liabilities, most importantly, balance of assets and liabilities. Now, this was not available previously. Now, mostly all municipalities have started coming up with annual financial statements. So, annual financial statements provide the details of assets and the liabilities like we have seen a balance sheet. And obviously, this brings a lot of transparency in the accounting system also. Now, just to give an idea, those who are new to this municipal accounting, there is a National Municipal Accounting Manual, as I've said, which was prepared in 2004 under the guidance of the instruction of the Honorable Supreme Court by the CNAG Task Force. Now, basically, CNAG Task Force created this task force, and then this task force gave responsibilities to a group of people, and which was represented by our members of the institute also. And they all came up with this National Municipal Accounting Manual. Now, this manual gives a comprehensive guidance to all accountants, auditors, and users of the financial statement of municipalities. And the manual have 4 parts. Basically, it's a very voluminous document. One can download from the website available. But all states have adopted this manual. In some states have made some modification. Some states have totally taken that in that manner itself. So the 4 parts of the National Municipal Manual are the general. There's a general part. There's an accounting for transactions, period and requirements, and others. Now, this accounting for transaction part covers taxation for all revenues. So all revenue transaction revenues, the accounting for revenues or local body taxes are covered under the accounting for transactions. So these are all covered. In fact, the accounting also covers that if there are receivables, if there are provision for bad debts, provision for doubtful debts, so these are all being covered because property tax is a receivable for the municipality. So receivables has to be shown. So all accounting are being covered under the NAM for this revenue accounting and taxation accounting. Now, just to give an idea that till date, mostly the audit of the local bodies are done by the CNAG, if not specifically allowed by the state government. So CNAG will always have a mandate for the audit of the local bodies because it basically flows from the CAG's DPC Act of 71. And because the local bodies are getting grants from the union government and the state governments, that's why these local bodies are subject to the CNAG audit. But many states have started some sort of an audit by our fraternity members also. Like I will show you, give an example over here only. Now, what the CNAG has done over the years is that they have prepared a technical guidance and supervision (TGS) and prepared many manuals and etc. So CNAG also has come up with these documents: auditing standards, guidelines for certification, manual of audit, audit training materials, list of codes. Now, at the same time, our committee and our institute has also come up with accounting standards for local bodies. So ASLBs are there for the accounting, and the auditing standards are being prepared by the CNAG. But a lot of documents are available for one to do the accounting and auditing. Now, as our commissioner of the committee was saying, suggesting that you please go through ASLB 2 and ASLB 5, because these are the two ASLBs that has been mandated for the chartered accountants to verify when they're auditing the financial statements of the municipalities. So please take a note of that. Now, one important thing that I would bring to close the session is that there is section 90 of the Bihar Municipal Act. In the Bihar Municipal Act, it clearly says that the audit of the municipal bodies can be done by an auditor appointed by the state government to the panel of professional chartered accountants prepared in that behalf of the state government. So Bihar Municipal Act clearly allows the appointment of chartered accountants as an auditor, and it is being done regularly, that I know. So if the state government's legislations allow such things, then definitely audits can be done by the chartered accountants. But predominantly in India, the audits of the local bodies are being taken care of by the CNAG. So that was my last slide. So thank you all for I don't know how much I could explain or how much I could express myself. So I have a 10 minutes slot available, less than 10 minutes, maybe 8 minutes. So I would ask Shivani to suggest some questions. If you have received any questions, please suggest so.
Yes, sir, there are a few questions in the chat box. Are they visible to you?
Yeah, they are visible to me. Please let me see. Does UP follow unit area method for property tax calculation? Sir, I don't have the information about UP, but as far as I know, some cities have started the unit area method, but probably not all. Maybe I remember Kanpur had started. Kanpur have started unit area method, but I don't know what is the status now. I have not been to UP for many years for all this purpose, so I'm not sure of. So you can kindly check with the local people over there. With the implementation of GST collection of advertisement, Gram Panchayat has been stopped. Yeah, so this is an area which is a really concern area for me also. This is an area where advertisement tax collection from Grand Panchayat is stopped now. Basically, you have to think about the new avenues. But one way is definitely I can suggest is that it can be some regulation fees, because these advertisement hoardings are coming up against some regulations. So these regulation fees can be thought of, but you have to have appropriate laws and regulations for that, bylaws and laws for that. So one can think about it. Some states were working on these, I know, but I don't know what is the outcome yet. But this is an area where upon introduction of this GST on this particular aspect, the revenues of the local bodies have dwindled a lot. Someone says no other questions. So Shivani, shall we wait or?
No, sir, there are no other questions. So
no other questions.
Much,
so I don't know how far I could deliver or whatever.
No, it was a wonderful session, sir.
Yeah. Thank you for that. Thank you for the opportunity. Thank you for the opportunity.
Thank you, sir, for your enlightening words and creating awareness on the topic. Thanks a lot, sir.
Okay. Thank you.
Geographically, the 7th largest country in the world. One of the oldest civilization, world's 6th largest economy, a global hub for innovation with one of the largest startup ecosystem. India, city of Mumbai on the western coast of Arabian Sea, among the most advanced and modern metropolises in the world, and the financial capital of India, gears up to host the most prestigious accountancy event of the world, 21st World Congress of Accountants from 18th to 21st November 2022, an event held every 4 years. The Olympic of Accountancy Profession. India hosts the event for the first time in 118 years since the WCOA came into being in 1904. Around 10,000 delegates expected to join virtually. More than 6,000 delegates from over 135 countries would congregate to exchange views at the world's most advanced Geo World Convention Center. The theme, Building Trust, Enabling Sustainability, will inspire the future of accountancy profession to create sustainable economies for the future.
The ICAI is honored to be the host for this mega event, which will bring together the world's largest conglomeration of professional accountants, regulators, leaders, and visionaries to advance the cause of the global accountancy profession. Now, with the ease of travel restrictions across the world and the situation returning to normal, we are working towards creating a never before and a unique experience for all our delegates. The year 2022 marks the 75th year of India's independence, and the Government of India is celebrating the year in a big way to showcase the glorious history of India. World Congress of Accountants 2022 would also be celebrated as a mega event to showcase the important role that the accountancy profession has been playing in the economic and social development of the country.
A never before witnessed unique experience of learning future trends, emerging avenues, enhancing skill sets, networking, and to explore the incredible India awaits you.
We at ICAI are pleased to host you here in Mumbai, the financial capital of India, for the 21st World Congress of Accountants with the theme Building Trust, Enabling Sustainability from November 18 to 21, 2022, and give you a professionally enriching and personally rejuvenating experience. We are hopeful that the conference shall be stimulating and productive, and your stay in India will be a memorable experience. Once again, we invite you for this enthralling convergence in India, the land of multicultural, historical, and spiritual inheritance since centuries.
Insights from the stalwarts of the profession, international and national standard setters, regulators, and trendsetters will constitute the panel of speakers at WCOA 2022. Let your dream get bigger. Come, be a part of this mega celebration. For registration and sponsorship opportunities, contact. Organized by Institute of Chartered Accountants of India under the aegis of IFAC.